In a shocking turn of events, Strategy, the company once synonymous with Bitcoin's buy and hold philosophy, has announced plans to sell part of its massive Bitcoin treasury. Here's what this means for the future of cryptocurrency. Looking ahead, the potential outcomes of Strategy's monetization program remain uncertain. The company's decision to sell Bitcoin could precipitate additional declines in Bitcoin's price, with analysts suggesting that support levels around $58,000 may be tested. This scenario could further accelerate the current bear market, creating a downward spiral of selling pressure that may extend beyond Bitcoin itself, impacting the entire cryptocurrency ecosystem. Bitcoin has long been viewed as digital gold, a hedge against inflation, and a store of value. However, the increasing volatility and the specter of corporate sell-offs could undermine these perceptions, raising questions about its stability as a safe asset. The backdrop of rising interest rates and persistent inflation adds to the uncertainty as these macroeconomic factors influence investor behavior. Conversely, should Bitcoin stabilize without significant further declines, there may be an opportunity for a recovery. Nevertheless, the absence of clear signs of improvement in macroeconomic conditions could leave investor confidence fragile. Experts remain divided on the implications for Bitcoin and the broader cryptocurrency market. Some analysts argue this moment represents a critical juncture where institutional players may reconsider their Bitcoin treasuries, possibly triggering a larger retreat from cryptocurrency investments among corporations. As investors closely monitor any announcements from Strategy regarding its monetization program, market reactions to these developments will be pivotal. The implications of this situation extend beyond immediate financial metrics, potentially reshaping the investment landscape for cryptocurrencies. This raises an important question. Is this the beginning of a shift away from the buy and hold narrative that has dominated Bitcoin investment strategy? In the coming weeks, the response of both retail and institutional investors will be crucial in determining the future trajectory of Bitcoin, particularly as it grapples with its dual identity as both a speculative asset and a legitimate financial instrument. To understand how we arrived at this pivotal moment, we must examine the backdrop of Bitcoin's recent performance. Bitcoin has faced significant challenges in recent months, with its value recently declining by 1.5% after failing to hold the crucial $60,000 threshold, dropping to $59,250. This decline is part of a broader bearish trend, as Bitcoin is on track for its first consecutive quarterly loss since 2022. The cryptocurrency market has been rocked by forced liquidations exceeding $2.5 billion in a single day, a response to rising geopolitical tensions and fears of tighter monetary policy from the Federal Reserve. Additionally, persistent outflows from Bitcoin exchange-traded funds, ETFs, have further pressured the market, leading to a loss of confidence among investors. The scrutiny of prominent investment firms has intensified, particularly following a downgrade of Bitcoin's price target by TD Cowen. Ripple's CEO has also criticized the funding model of influential figures like Michael Saylor, contributing to an overall atmosphere of skepticism. This ongoing turbulence has created an environment where even the most steadfast proponents of Bitcoin, such as Strategy, are reconsidering their strategies and positions. The combination of market volatility, regulatory uncertainties, and institutional pressures has culminated in today's shocking announcement, marking a significant shift in the narrative surrounding corporate Bitcoin holdings. The implications of these developments extend beyond immediate price fluctuations. They signal a potential reevaluation of cryptocurrency's role in institutional portfolios. Looking ahead, investors and market analysts will be closely monitoring how these changes affect overall market sentiment. The future of Bitcoin and other cryptocurrencies may depend on how effectively firms can navigate this turbulent landscape. A cautious yet adaptive approach could be key to regaining investor confidence in the coming months as firms reassess their positions in light of evolving market dynamics. The announcement from Strategy regarding its potential shift in Bitcoin investment strategy is a pivotal moment in the cryptocurrency space. Known for its strong commitment to Bitcoin, Strategy has long been viewed as a stalwart of the buy and hold forever philosophy. This shift could drastically alter how institutional investors perceive Bitcoin and its stability as an asset. The immediate market reactions are already palpable as traders and investors scramble to assess the implications of this news. If Strategy moves to liquidate even a fraction of its Bitcoin holdings, it could further destabilize an already precarious market and trigger widespread panic selling. Currently, Bitcoin is struggling below the critical 200-week simple moving average, inching dangerously close to lows around $58,800. This precarious situation is exacerbated by the broader cryptocurrency market's staggering loss of approximately $467.6 billion in value over the past week, driven by a confluence of geopolitical tensions, financial uncertainties, and increasing regulatory scrutiny. The ramifications are significant for investors. If Bitcoin's price continues to decline, it could result in substantial losses for both retail and institutional holders. Moreover, the cascading effects of such a downturn could erode confidence in digital assets, prompting a reevaluation of risk amongst investors. Strategy's announcement could also serve as a harbinger for a broader trend, where other corporate holders may reconsider their Bitcoin strategies. Such a shift could shake the very foundations of cryptocurrency investment, leading to increased volatility and uncertainty across the market. The average person should take note of these developments as they extend beyond the realm of cryptocurrencies. They touch upon financial stability, investor sentiment, and the future viability of digital assets. Looking ahead, the actions taken by Strategy and similar major players will be critical in shaping the cryptocurrency landscape. If more institutions follow suit and reassess their Bitcoin holdings, we may witness a transformative shift in the perception and utilization of digital currencies. This evolution could have long-lasting effects on investment strategies and the broader financial ecosystem in the coming months. On June 30th, 2026, Strategy, formerly known as MicroStrategy, made a dramatic announcement that has sent shockwaves through the cryptocurrency world. The company authorized a $1 billion share buyback for its preferred stock and Class A common shares. Additionally, it launched a $1.25 billion monetization program that includes potential sales of Bitcoin. This decision marks a significant departure from founder Michael Saylor's long-standing commitment to never selling Bitcoin, a principle he upheld for over a decade. Strategy is recognized as one of the most aggressive corporate Bitcoin holders, with an extensive treasury valued at over $60 billion. The backdrop to this announcement is a challenging financial landscape for the company. Recent market conditions have seen Bitcoin struggling to maintain its value, now hovering below crucial technical levels. As of June 30th, Bitcoin was trading around $58,800, having dipped to approximately $59,250 that day. This downturn is part of a broader trend affecting the cryptocurrency market, which has been grappling with tightening monetary policies and increasing regulatory scrutiny. The Federal Reserve's recent interest rate hikes and discussions around potential digital currency regulations have added pressure to an already volatile market. The implications of Strategy's decision are profound. If the company sells even a fraction of its Bitcoin reserves, it could trigger widespread panic selling across the market. Such a move would not only undermine the price of Bitcoin, but could also erode institutional confidence in cryptocurrency investments. Strategy's prior unwavering stance on holding Bitcoin had made it a beacon of stability for many investors, and this newfound willingness to liquidate assets reflects a significant shift in the narrative surrounding corporate Bitcoin holdings. Looking ahead, the market will be keenly observing how this decision influences Bitcoin's trajectory. Analysts are concerned that any significant sale could lead to a cascading effect, prompting other institutional investors to reconsider their positions. The potential for increased volatility looms large, with many investors questioning whether this marks the beginning of a new trend among corporate investors. As Strategy navigates these turbulent waters, its next moves will be critical in shaping the future landscape of institutional Bitcoin investment, particularly as competitors may follow suit in response to market dynamics. As we contemplate the future of Bitcoin, will this mark the end of the buy and hold strategy that has long defined the investment philosophy? Share your thoughts in the comments and subscribe for daily deep dives into the latest developments.